I'd like to welcome everyone out to the Hurley Services Financial Commentary or the Financial Service Commentary for Hurley Investments on the second week. I guess it's going on the third, huh? The 16th of January, 2018. Oh, so Rich. Now I'm jealous. All right. Rich just let me know he's going ice fishing. So now it'll be interesting. The bite is on. That's out there in it looks like Pennsylvania, huh? Only iced fished here in Utah. Kind of interesting to be able to do it. I might want to talk to both of you guys here down the road on how you guys do and how you do it. But let's talk a little about today. Pretty amazing day. And the question is, what happened? Started up 280, then down, 103 to finish down. I think it was only 20, right? Down 20. So the short answer is, what happened? Actually, it's only 10, down 10, 10.33. So the big question, what happened? What went on today that caused this to occur? I know it's kind of hard to go from talking about fishing to talking about the stock market, but what's going on? Anyone? Give me, if you don't know, type a couple question marks in there. What do you guys think happened today? And again, if you don't know, type a couple question marks. I won't wait on you too long. What caused such a ridiculous day? Hopefully it wasn't ice fishing, right? Profit taking, no idea. Well, yeah, your first thought when you see the market open 280 to the positive, right? Of course, your first thought could be, in all honesty, E-mini, profit taking, and just profit taking in general, right? Right out of the gates, I'm going to call it kind of day trading. No, that's not true. That'd be swing trading profits. What else could it be? Or what else caused today? Because profit taking is a little bit hard, Rich, because most of those already set into place. And so you don't see big money. You wouldn't see it up so much that first hour without it dropping pretty quickly within the first 10, 15 minutes with orders being triggered. Hey, the VIX went up like 10%, right? The VIX up to 10.66. That's true. We did have the VIX up. $10 to 11.66, excuse me. But pretty interesting. There are a couple thoughts out here. It could have been the news, can't type, news about the government possible shutdown. Out of curiosity, if I was asked this group, with an all-Republican government, do we think we'll have a shutdown and we won't be able to extend the budget out farther? What do you think with an all-Republican government right now, all three branches? You think we're really going to have a government shutdown? There's going to be some bickering that's going to shut down the government and they won't extend the budget out? There still is in play for every new program the president wants to shut down 2 others. Yeah, the thought process really isn't that you're going to have a government shutdown. They will most likely pretty easily extend the budget, put a stopgap in there. There's all kinds of things these guys are going to do. The Republicans don't want egg on their face. No, they're not going to have a shutdown. It's pretty easy to see. We're going to be in okay shape from start to finish here. So the only other thing I could find that struck me as interesting at all was there were no more buyers and the market acted as market makers ran out of positions. When I say positions they buy or sell, it really seemed like we were overextended to the sell side. There weren't any buyers in our market, which usually looks to be an overextended market. So here's the question. How long will it last? Right? Out of curiosity, how long do you think this is going to last? Kind of worrisome because in all honesty, right, is this the start of our 30% correction? Is this the start of the Druckenmiller 75% correction, taking out or backing out all the government stimulus? Is this the start of a 2 to 3% pullback? Now, the funny thing is, I'm going to jump down here to the Dow. We've only been, overbought for 2 months. Nothing major, right? In fact, we've only been overbought for 4 months, except for a 2.5 week, 3 week gap in there. Unbelievable how overbought we've been. Now, Rich asks a really good question. What do you look at to tell sellers exceed buyers or vice versa? So there's a couple different things. On balance volume for the market. You can go to a level 2, level 3 type trading where it's going to show block orders as they come through. And that's interesting because block orders or a level 2 trading or level 3 trading, I can't remember which one we're talking about, but it shows the orders that come in, if they're coming in groups of 100 or blocks. And I saw blocks today. I saw big sell orders versus, more of a retail trading where you have, retail that's buying and big money that's selling or vice versa. You saw blocks going for being sold and little 100 or 50 or, odd numbered buy orders going in. So block trading could show it to you. On balance volumes I mentioned, or as you look at market movements in general, it was pretty organized for the most part today. And when I say organized, it's looking at it a minute by minute chart. You can also see another version of level 3 trading where you see the red and the green as you're looking at a second by second or live version, off or down it goes. So the short answer is rather unusual to see the progress today. Now, if we take a quick peek, and I'm going to do a little bit of highlighting here, as I see our market, if I was to use a highlighter, goes up, pulls back, goes up, pulls back. So let's go from right here, right? Goes up, stagnates, right? Run up, kind of stagnates. Little run up, finally have a bit of a pullback. Big run up, comes down, runs up, stagnates. We've had a big run up. Would anyone be really concerned if it goes sideways or stagnates a little bit in the next week, week and a half? Would it be a big surprise? Would anyone be worried if it does that in the next week, week and a half? I wouldn't be too worried about it. Maybe I should be more worried about it, but I'll be honest with you, I'm not. My biggest concern was the IBB, which is the NASDAQ Biotechnology. It's a firm I don't know extremely well, but as I looked at this one, I've got 30 some odd contracts out there waiting for a March. I think I'm in that 108 or 106 to 111. Maybe I go to 108 to 113 level. I've got a long-term spread trade on a position that I don't necessarily know extremely well. So that was my thought process today. Is it time to take a little bit of profit there or lessen my exposure there? There has been a talk. I've looked a little bit at American Outdoor Brand Corp, AOBC. That's done nothing but go from 21 since I got in down to 12. Did hit 11 there, but down to 12. And I'm sitting on that one going, I'm kind of stuck in this one till another earnings. But other than that, I would expect banks to do fairly well. I enjoyed hearing how good Citigroup did today. When I'm looking at new positions, CarMax might offer some opportunity. But as I look at this chart, technically speaking, what does this chart show you? What does this chart show you? Take a look at the chart. What does it show you? Clear as day. You guys are quiet tonight, huh? What's the chart show you? It shows me a bunch of worry, right? How do you stay overbought for 4 months with a little 3-week gap in there? Indexes aren't supposed to act like this. Ready for a pullback? Definitely. And a pullback, probably a 3 to 7% doesn't make it worthwhile. It probably needs to be a correction type pullback to make the market cheap, to incentivize buyers back into it. The technicals are not making sense right now. There's another technical where if you look at the 50-day average, I'm going to go ahead and get this a little bit different here. I want to choose a pen color. Let's do black. So another thing to look at, if you take a peek, I got to get this out of the way. Hold on one second. So it's rather interesting. We have a 24, 310, 50-day simple moving average. And at one point today, we were at, I'm going to say 28. I'll give you exactly where we were at. Give me a quick second. We were at, the highs today, we were at 26. 2686, right? So if you take a calculator and you do 2686 minus 24,310, we come out with a difference of 1776. Let's make sure I did that right. 26086 minus 24,310. That is correct. We have a spread in here of roughly 1,776 points. And I know I'm not doing that right, so I'm just going to erase that. But the short answer is, if you take 1776 and divide it by, I'm going to say where we finished, 25,792, we've got a spread of 6.8%. And normally that deviation should run no more than about 4.25%. Usually when you see a 4.25%, you seem to either get sideways movement or a bit of a pullback, a bit of a sell-off. And here we are at well over 7. If you go up to that 26,086, huge standard deviation there where you're looking for a narrowing, where you don't see the market run ahead of itself, where a lot of your algorithms, your Fibonacci's, the herd mentality comes in, Elliott waves come in, where you see that pullback because the deviation over the 50-day is too great. If you were to look at it, there's one from the 50 to the 200, and that deviation, usually look at how wide we are right now. When that deviation has been half of that size in October, we're really widening our deviation from buyers and sellers is the best way that I can describe it. Futures right now show that we have the market up tomorrow 32 points. And as I think about it, I think tomorrow we kind of make up and we recapture that 2,600. It took me a little while to justify that, but my justification comes in who's reporting. Bank of America, Goldman Sachs, U.S. Bank Corp. We have Alcoa after the market closes. Morgan Stanley, IBM, AXP is the credit card company. What is it? The one that charges you every time you use it. American Express. IBM will probably be a downer, but we have more of those financials there. Then Friday, First Horizon National, Suncorp is the STI in there. This is the banking week. This is the first full week of the banks. We did have JP Morgan, Wells Fargo last Friday, but we had the financial sector. That's one of the sectors that'll benefit the most from corporate taxes coming down. Now, as I woke up early because I was exhausted after a soccer weekend with my son out there in Las Vegas for the Vegas Cup, I crashed today up at 4:30 today. One of the first news reports I saw this morning was how taxes and the new tax reform are going to hurt the home sellers and people that want to get a mortgage. Will someone please tell me in this group, how does the new tax reform hurt home builders and those that want to get a mortgage? Anyone know? How is it going to hurt that group? Home builders, those that want to get a mortgage, which in fact will affect the banks, right? Anyone remember? Isn't there a provision that says, they're only going to write off up to what, $750,000 of the interest off on those home loans? I don't know about you, but again, does that sound more like the top 1% that has a worry of writing off $750,000 of interest on their home loan? That's usually for those that have homes of $750,000 or more. My opinion, and I'm someone that owns a home that's worth more than $750,000, I still have the bulk of my interest being written off. I would love to sell what I have, book some of that profit, and put it into something new about that same price. I don't see how taxation is going to kill the home builders or the banks. Lennar had a pretty good week last week with its earnings. So did KB Homes. I'm looking for the same thing on the 31st for DH Horton. Could it be that startled the market when they read through that? Possibly, but the numbers don't add up. The numbers don't add up to show you're going to have a big drawback in home building. In fact, if anything, the numbers show supply and demand, there's not enough homes out there for the middle class. There's not enough homes for people to sell a $200,000 home and take some profit and move into a $350,000 home. That's kind of what people do, right? You buy a starter home, work your way up. The supply is constrained right now. So with all that said, my expectation tomorrow, I'd like to see things go higher. With that said, some long calls on Bank of America, maybe a leap long call out at 35 might be a pretty good idea if you're looking for an individual trade. Something that's way out there in time, maybe go out to 2,000. Spend $3 on a $35 long call. Play earnings on a company that, if it has good earnings, could really get to 35 in a day or two. Yes, Bank of America has earnings tomorrow morning, but could continue on up to 40 from there. When I look at what's happening in wine this week, really it comes down to earnings. As I look at our economic reports, I don't see a whole lot that I worry about, but I'm going to say it's earnings, and really that earnings are bank earnings. Options expiration. And Wednesday, tomorrow morning, Wednesday, China reports. That's really China economic reports. That's kind of running our news. Is it true we could have a government shutdown? Yeah, maybe. But if it's government shutdown, that's probably a buy the dip. I would consider that a buy the dip opportunity because I really don't think we're going to have a government shutdown. With that said, I would still tell you, if you ask me how we're going to do the rest of the week, I would say we'd go higher. Our S&P, extremely bullish, looks a lot like the Dow. Bullish and overbought on the RSI. If we look at the NASDAQ, I need to change this from last week. Bullish and overbought on the RSI. Prime for a pullback. Have been prime for a pullback for a while. It would surprise me if we saw it. I would still think in January we're going to look at least at a 1.5, going back to the S&P 500. Basically, it's a run from 2,700 up to 776. So we're actually looking at almost a 3% run right now. I will most likely change that to a 2.5%. Think we'll run through banks. In fact, boy, it could be a 3% month. But as I look at it now, I'm going to change this right now. I'm going to tell you we're probably going to be up 2%, doing nothing more than following the trend. Earnings this week, really pretty easy. We know it's financials. There are a couple other ones sprinkled in there, but financials are the big ones. Obviously, tomorrow morning will be a big one. Schwab might not be as big as you expect. KeyBank, Morgan Stanley, IBM probably will disappoint. So you might see a hit on the NASDAQ. I believe IBM's after the market closes on Thursday. Wednesday, NAB's housing market, again, pretty easy. Industrial production, capitalization. You might see a bit of a pullback there. Nothing to worry about because it's seasonal. It happens. We did have a pullback on the Empire at 17.7 versus a 19. Still well above, moving in the right direction, higher than usual, and not a big worry there. Again, Wednesday we have some interesting comments from China. Housing price index, GDP, industrial production, retail sales. They're usually building for the Chinese New Year's. So if they're not building in these areas, it might be a little panic in the world. In fact, you know what's interesting? Guess what I heard was the biggest panic for most people that I talk to, that I am, thank goodness, have been able to save them from this. What do you think the biggest panic that I've seen here recently or heard of? Ready for a pullback? Nike? No. Oh my gosh, the Bitcoin is down below 10,000. Bitcoin's down below 10,000. What am I going to do? Well, it'll only be there briefly, but pretty interesting. Bitcoin, what a waste, what a fad. I thought Crocs was a better stock than Bitcoin, but I brought in a little about Buffett and his thought on Bitcoin. I believe somewhere in here he'll make the comment, I watched it go from 100 to 1,000, down to 200, up to 16,000. And again, he calls it, plans on it to plunge almost more down below 1,000 again. Who's Buffett? You know, what would he know? Owning an asset that's been called both a fraud and the future can be an emotionally intense experience. It's ridiculous. He kind of says you look away from it if you invest in it, you buy and hold it. There's his comment. Oh, that's Rick Eidelman that made the comment. I watched it go from $1 to 1,000, back to 200, then to 16,000. Diversify beyond just Bitcoin. There are a lot of cryptocurrencies you can get into. Invest only what you can afford to lose. I'm a big person that says I can't afford to lose any money in the stock market. That's not my style. I made the comment the Fed's worrying, or I put in here the article that the Fed's worrying about the next recession and what they're going to do to combat it or change it. Interesting, because the biggest considered change is going to be, hey, let's go right to quantitative easing. Let's go to spending more money. And then obviously a different side, legendary investor Bill Miller, market be heading for a multiple of 30%. I just found it interesting that some people think it can go higher. With that said, I'm glad to see Einhorn struggling. I'm not a big fan of Einhorn. He was up for all of last year at only a 4.9% return, but he was up 4.9%. Someone with $1 trillion only made a 4.9% return last year. The first quarter he was up 1.2. Second quarter he was down 4%. Third quarter he was up 6.2, and last quarter he was only up 1.6% on a 6% quarter in the market. I'm bringing up Einhorn only because he goes long short, and unfortunately for a professional trader that's got so much money that he moves the market, he again is making some pretty bad bets. Einhorn, he's a long short trader, would be the best way to say it. And the few losers on the short side ruined the portfolio. Yes, it's a way to be hedged. Yes, if the stock market tanks, you'll make really good money. But I warn y'all, a long short portfolio has huge amounts of risk, especially when you're in it. Call millions of shares of General Motors that was up for him 24%, preferred stock, blah, 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 blah. And boy, he ate it all away on his shorts on Caterpillar and shorts on Tesla, on Netflix. It just gold. It ate him alive. There's a better way to trade. There's a better way to invest people's money. All you have to do is spend a little bit of money for protection. Protective put, collar trade. Pick up more shares on the way down. I'm about ready to pick up a couple hundred shares in 3 accounts, in each of the accounts for Outdoor Brands Corp, whatever, American Outdoor Brands Corp. We've made some good money on the way down. It still has been my biggest loser last year. Time to add a couple hundred shares to it. Time to see if it can't take off. Kind of unusual because it should be a pretty good trade. It should be a pretty good opportunity to make some good money on a stock. I wouldn't recommend it because it's not loved by the market right now. And even if, mathematically, if fundamentally it should be a good position, if it's not loved by the market, you could run into some pretty big problems with it down the road. As I take a look at the futures are up 58, S&P are up 2.25, NASDAQ's up 8. It'll be interesting to see if those hold. You guys should be paying attention, getting ready for earnings. I think earnings can move our market higher. Here's my list of what I'm watching right now. If it has an after a market closed, AMC, or before the market opens, those are my indicators that, hey, it's confirmed. If it doesn't say any of that, then it's an unconfirmed. So I don't know about Soda. I don't know about Altria. Ford's still not confirmed on the 24th. Baidu's not confirmed. So here's a little bit of my list and what I'm looking for here in the near future. Obviously, the big one tomorrow morning for me of Bank of America. Any questions you guys have that I can answer for you? Any questions that you guys have that, as a registered investment advisor, I can answer for you? North Korea. Yeah. And that was Nike. That was not Nike. That was North Korea. But North Korea doesn't seem to worry me right now. All right, guys. Hey, if there are no questions, I'm going to wish you well. Glad to have you here at the beginning of the year. What kind of equity do you believe are good candidates for 2018? Abraham, financials. And with that said, any company that has the ability to repatriate funds or that has a high tax bracket in the, high 20s to 30s, all of those have a significant opportunity to change earnings per share. And it'll be both a bottom and a top line move. It'll be really interesting through this earnings and next earnings to see how companies reset their guidance. Unbelievable guidance from Citigroup. And they basically said, hey, reins are off us. Some things have been pulled in, and we have the ability to have lower taxes. If you want to see some look on what the tax reform does, go look at Citigroup's guidance. This could affect the material stocks where it can now bring forward your write-offs. A Caterpillar, a Deere, a Boeing, these ones that are heavily vested in equipment, it's going to help them significantly for write-offs. So I'm obviously pushing financials, but anything that can pull forward into the front year depreciation, anything that has a tax rate in the mid to high 20s to the mid to 39% tax group for businesses, they're all going to fare well. You should see a very positive earnings flow, and the key, I guess, if they can translate that into higher wages as well, is keep in place good products. You'll see a good future for at least really 2018. It's where Miller talks about the opportunity to continue to melt up through 2013. And that's the most obvious. Again, we'll see tomorrow. When we see Bank of America, Goldman Sachs, U.S. Bank Corp., it'll validate what J.P. Morgan said. It'll validate what Citigroup said this morning. Don't forget options expiration on Friday. If you have options, you'll have those that you'll need to rejigger, let expire. Don't let stuff get called away. I also have some options into that fourth week of January. It just seemed to fit me better for some of my earnings. But that'll be pretty interesting to see there. Any other questions? Good question, Abraham. Any other questions I can answer for you guys? If not, hey, glad to have you guys back. Glad to see you. A couple of you, I zipped off a phone number too. Love to talk to you about ice fishing. Guys, have a good night. I'm going to get this saved. I'm going to get this posted here. Probably not till tomorrow night, but guys, things look good. Have a good evening. I look forward to talking to you next week. We enter our earnings season, so start to get protected for earnings. This might be one where you're going to protect yourself with bear puts and or a little bit slightly out of the money puts. I'm going to run most likely. Well, I am running. I'm running Bank of America, $1 out of the money. I've got right now Baidu, which is $12 out of the money. Apple's got to be at 170. My long put. So Apple's got me about $6 out of the money. It'll be interesting to see what we do. I've got Disney at 110, so I'm going to run them at 110. Ford, I'll probably run at $13 for their long puts, but I'm gonna kind of be on the cheap side. I think we're going to see that push, so I'm going to run my portfolios accordingly. Guys, have a wonderful evening. Look forward to talking to you next week. Appreciate you being here today, and have a good night. Bye-bye.